Good afternoon, everyone. Um, Thank you for taking the time. I want to speak on a topic which is um, very important, and I'll speak from a B2B perspective. I want you to look at this as a case study of a fintech, a payments fintech as Zaggle, where we've been able to build an interesting SaaS fintech business, which is profitable, scaled, and today listed, right? So, would like to keep this interactive, maybe have this talk or presentation for about 15 minutes, and then last 5 minutes we could do Q&A, right? So that's the context. So some basic background. We all know that fintech as a space is exploding in India. Lots of great stuff happening. We've got great numbers, great transactions, great volumes. From the outside, it looks that everything is perfect, right? And if you look at the underlying drivers, they're pretty clear and pretty solid, right? You've got deep digital penetration. You've got a great platform created by the government through NPCI and through Aadhaar and all the other frameworks like OCAN, etc. And then you got demographics, which really helps the Indian story because we have the ability to be able to create scale like probably nobody else apart from maybe China in the world. And we are an open democracy, so that obviously helps, right? So that has resulted in trillions of rupees worth of transactions happening through our ecosystem, right? But what does that mean from a B2B perspective? How does that look for a B2B company, right? Now, on the B2B side, the problem is a little more nuanced. The challenges are a little more deeper. A lot of corporates, especially enterprises, are still with some of their legacy systems. So you need to create a solution which is able to work well with a legacy HRMS or a ERP, which is an older version, or a CRM, or any of the other internal systems that the corporate currently uses, right? The enterprise customer. Then there is a lot of focus both from the regulator and rightly so, and the corporate customers to be able to safeguard the interests of users, data. We are, for example, a GDPR certified company. DPDP is on the anvil. Card tokenization has come in the last few years, and that has had its own, benefits. But some of these things have meant that predictability of how the experience would be has not been as high as the corporate customer would want, because new changes come, new regulations come, and frankly the industry is always 2 steps behind today in India to the regulation, right? So we are all trying to make sure that we are catching up and meeting the pace at which the regulator wants us to move, right? In all this, you need to innovate. You need to give something which is unique, which is better, which is more valuable to the customer. And that's not easy, given how much there is pressure on both, the margins. There's also, a lot of changes in the global opportunity with AI and newer technology coming in. So those require investments. So that's the challenge part of it, right? So that's where the challenge is. And how have we tackled these challenges, and how have we overcome these challenges? And we continue to overcome them, but what has been our thesis? So our thesis has been very simple, right? We, somewhere a few years ago, I would say maybe 6-7 years ago, we realized that at least in the B2B space, just offering payments is not going to solve the problem for the corporate. It's going to be very vanilla. It also means that your solution will not have the ability to command a premium, right? And that's where the SaaS, or the software as a service, the software part of it becomes extremely integral. Of course, all B2C fintechs also provide software, but to be able to provide something on the software which is monetizable. So your corporate customer turns around and says, hey, this is valuable enough for me to pay you a fee, right? That is what we were able to tap into and say, what are those kind of spaces? We looked at it and we said, let us try and digitize all the corporate spends. Everything that the corporate spends on, whether it's employee, whether it's channel partner, whether it's accounts payable for vendors, all their spends outside of budgeted capex. Budgeted capex, as you would probably agree, is a relatively well-solved problem by banks. So anywhere where there is large number of payments, large number of spends, in terms of number of transactions, the ticket size of these transactions may not be running into hundreds of millions of dollars. It could be a few lakhs, it could be a few crores, or it could be a few hundreds. Like we just launched our solution called the branch recurring operating monthly expenses. So anybody with a branch, anybody with a retail chain, we've just now signed up with Subway, we've signed up with Big Basket, Zepto, Blinkit, one of India's largest retail chains. They've requested us not to talk about it until we do a joint PR, so I'm refraining from them. But they are everywhere, they are very big, and they have 20,000 stores, right? So their entire petty cash, utility bill payments, we're even expanding the BROME solution for their some of the rental payments. So there are use cases today. If you talk to a CFO, you'll come across and say, literally every CFO that we spoke to in an NBFC or an AMC or an insurance company, a bank, retail stores, the one common refrain was that our petty cash does not reconcile, right? And we were able to find that use case, build a software, link it to UPI, create a solution both for our commercial credit cards as well as our prepaid cards, and create a very 360-degree holistic solution with analytics and dashboards, etc. Right? So that is basically what we call as spend simplified. Right? Now I want to talk about, as we looked at this problem from a more mundane perspective or a more basic perspective rather, right? When we started to look at wanting to scale our business, we said, how do we really create a profitable model which is sustainable, right? And one of the things we realized is, unless we are able to monetize 360-degree, monetize through all the stakeholders that we are bringing value to, and make sure that the money rotates through our ecosystem as much as we can, we won't be able to create a profitable business. So let me explain, right? So when we sell software to corporates, we charge a SaaS fee. We acquire their users, like their employees or their vendors or their channel partners, at a negligible CAC, because when you sign up a corporate like a Wipro, you get their employees. They register on your app, they take your card, right? So any of these companies, that's the benefit. We have 3,200 plus corporate customers today, right? These users, we nudge them to spend at partner merchants. Partner merchants give us deals, coupons, offers, etc. They also give us commissions for the footfalls and spends that we generate. And all of this we do in partnership with banks and networks. We work with all the three networks, RuPay, Visa, Mastercard. We work with 15 banks today, HDFC, ICICI, Axis, Kotak, SBI, PNB, Yes Bank, IndusInd Bank, IDFC First. So all the major banks in India, without exception, I would say we partner with to either issue commercial credit cards or prepaid cards. Some of them are co-branded, some of them are mono-branded. Or we have partnerships with banks like DBS and HSBC who sell our software to their corporate customers. Sell as in they offer it to their customers and we contract them separately and we get a software fee, right? So multiple models, but the bank gives us reach, distribution, and we ride on their licenses. So banks get a lot of benefit in terms of float. Banks get a lot of benefit in terms of a high quality corporate base, high quality user base to whom they're able to cross-sell, upsell. And it's a win-win-win model, right? The corporate wins because they have the deeply integrated software coupled with a bank system. So we have all the API integrations with our partner banks on the one side. On the other side, we have API integrations with the ERP and HRMS and other systems of the corporate. So it's a seamless digital experience end to end. So that's the model that we've been able to come up with. It's a hard model because you need to cover all the four sides. But when you do, I think you are able to create a sustainable, profitable business. So I just want to spend maybe a couple of minutes in sharing with the team our journey thus far. We are 13-year-old, almost 14 this June. And so we are not a startup, we are a growth stage listed company. But what did we learn in this journey? And how was our approach maybe contrarian to a lot of other fintechs, right? I'm not necessarily saying this is the only way. Neither is this a prescription. This is just a case study, as I said, of how we went about building our business and how we are going about building our business, right? So one thing which we didn't do, and a lot of our success is what we didn't do. So that was one big insight for us. Not to be afraid of being contrarian. So we didn't scale until we hit positive unit economics. That was very critical for us. We also didn't venture into any of the gray areas like credit on prepaid and a whole host of areas which eventually were clamped down by the regulator. We didn't take co-brand directives which were released by RBI casually. We were very serious about it. We made sure we complied fully in letter and spirit. And we didn't leverage any uncertified payment systems whatsoever, right? So anything that is that's not allowed explicitly, we have taken it as not allowed. And that's how we've built our business, right? So what did we focus on? Conservative route. We've scaled after the business model got established. And last 5 years, we are PAT positive. We continue to grow both on revenues. This year, we'll probably grow at 50 to 55% is what we have said. We may actually exceed that. And on the PAT also, our growth, is very healthy. We also took a clarion call to try and work with some of the more established banks who had better compliances, etc. That actually is hard to crack those banks, and they're quite particular that things should work in a particular way. But in the long run, it actually safeguards you from a lot of missteps. And we broad-based our offerings. We have a whole host of offerings in the spend management category, whether it's employees, whether it's channel partners, whether it's vendors. So we made sure that we are not dependent on one bank, one network, one product, one revenue stream. And we also, I think, take a lot of pride in the fact that we think Bharat first. We approach our solutioning from that perspective. We've always looked at keeping our platform, multilingual and offer vernacular capabilities there, right? So what's in the horizon? Maybe a couple of minutes around that, and we open up for questions. One is obviously AI, ML. AI is changing the world, and fintech obviously is at the forefront of these things. So it's going to really be disruptive. 5 years down the line, our conversations are going to be very different, right? Maybe you'll have a bot presenting to you, maybe sooner than that. And I say this, very seriously. So. UPI and beyond, I think a lot of UPI is happening today on the B2C side. We truly believe that a lot of disruption in the UPI capability is going to come in the B2B space through the UPI capability. So credit line on UPI and a whole host of things like this are going to really make a huge difference on the B2B payment side as well in the next 12 to 18 months, right? Real-time cross-border payments, I think all of us know that's going to come through. One of the things which I think the Honorable FM mentioned in the budget is also a central KYC. So I think a lot of the KYC issues, etc., will also get solved if there's a central platform that gets created. And I think embedded finance by now is an established approach to drive, traffic, drive transactions, and stickiness, and that's only going to continue to grow, right? So to conclude, I think it's payments. We believe the transaction part of it is just hygiene. That's expected. That's supposed to work. And if it doesn't work, then we are out of business, right? Whosoever is providing that capability. But the expectation of both the corporate and the consumer is, what is beyond that can you give me in terms of automation, in terms of analytics, in terms of intelligence, right? And then you obviously are looking for end-to-end integrated financial solutions where you've got embedded finance, where at the click of a button, you also are getting a lot of reports, a lot of analysis, a lot of reconciliation. So one of the things that we offer through BROME is complete automated reconciliation. BROME is our, as I mentioned previously, branch recurring operating monthly expenses platform for petty cash, utility bills, etc. And that's incredibly powerful, right? And we truly believe the next disruption in the fintech space is going to be on the B2B side. If you look at a lot of developed markets, you'll see that the B2B size of the business is probably like the US, the B2B volumes are larger than the B2C volumes. So at least in the dollar value, right? So that's what our belief is. To conclude, we're looking to grow. We continue to grow very rapidly organically. We're also looking to grow inorganically. We just did a QIP for 595 crores just a couple of months ago. So we're looking to grow both organically and inorganically. And we're always on the lookout for some interesting capabilities from young fintechs to collaborate and grow together. So that's it from my end. And I'll now pause for questions. If there are no questions, I'll thank you, everyone.
Thank you. Thank you so much, sir, for this informative session. And we would love to appreciate and felicitate you here, requesting Vikrant, sir, to kindly come up and present the memento to Mr. Avinash. It is our pleasure to have you here. Thank you so much. Can we have a round of applause for him? Come on, everybody. Thank you. Thank you so much.